Well, we got new data out this morning pointing to some relief on inflation. Consumer prices rose 4.9% year on year in April, marking the 10th straight month of cooling. But with prices still at historically high levels, there are increasing concerns about a recession. Our very own Seana Smith is at Goldman Sachs Industrials and Materials Conference, where she spoke to Joe Ritchie, the analyst who covers the sector for Goldman, about the economic challenges we're facing today. Take a listen.
Today, we are in the start of a very significant, infrastructure build in the U.S. Some might call it a U.S. manufacturing renaissance. I've been, covering this sector for a long time. The level of spending that's occurring today is unprecedented, and you can think about, semi-capex investment over $400 billion is being planned. There's a lot of stimulus packages at this point that haven't been spent. And so the tone coming out of the conference the last 2 days has been very bullish.
And it's interesting, given the time that we are in right now, the risk of recession, what happened, what's still going on with the regional banks, of course, and then also you had the showdown down in D.C. over the debt ceiling. Has there been any cause of concern or any tone that maybe that could be an issue here for these companies down the line?
At this point, from a fundamental perspective, not yet. We asked every company, and we had about 20 companies, our own, multi-industry coverage that I'm responsible for here over the last 2 days, and not one of them is seeing any signs of real credit tightness in their business today. Your question around the debt ceiling, clearly that's more of a technical issue for the market. And if you go back to the last time that we had, crisis was really back in 2011. Yeah, there was some volatility in the market during that time frame, and I would expect there to be some volatility again this time around. But purely from a fundamental perspective, our companies aren't seeing it yet.
When we talk about who is best positioned in this environment, who would that be from your coverage list?
Yeah, and so, had a lot of companies that were bullish. Mm-hmm. I would say that going into the year, where I felt the most bullish was really around the companies that were building products companies that were interest rate sensitive, that also had an opportunity for really secular growth opportunities beyond just this year. The HVAC sector is a really attractive sector. It hits all of those different buckets. Johnson Controls was a name that we had here today. And they're a company that last year also had some struggles because of supply chain issues. We're about a year in anniversarying some of the issues that they had, and this quarter marked an inflection where you're starting to see an easing in supply chain, and ultimately that's having a really powerful impact on growth. And that's not just a Johnson Controls specific comment, that's across the industrial sector. And you saw a lot of companies within my sector actually raise guidance, but I'd say if I had to pick one, it's ticker JCI, Johnson Controls, but there are several others that I can mention as well.
When we talk about the reshoring efforts, the investment coming from the government here in terms of manufacturing in the United States, how big of a factor is that for these companies in the near term?
Yeah, honestly, I think it's going to be huge. And so a lot of the leading indicators that we take a look at when we take a look at there's a Dodge index that will measure the value of projects that are breaking ground today, and those are projects that you're not going to see in the P&L until 12 to 24 months from now. And that index is up over 100%. And so clearly a tremendous amount of investment. You'll probably start to see some of that in their revenues and in their profitability as we progress through the year. But importantly, this is about it being a multi-year tail. And so one of the concerns that investors have today is that backlog is peaking, orders are decelerating, and typically you don't like owning industrial stocks when that's happening. But we've taken a little bit of a different view, more forest from the trees. Mm-hmm. And ultimately, what this is going to result in is as we progress through the year, a lot of these companies are going to end with very good backlog and 2x the visibility that they normally have into the next 12 months sales. And so we think it's going to be super important.
Joe, one of the common themes that I've been hearing amongst the fireside chats that I've been sitting in on, and also with the CEOs that we've been talking to, is technology investment and how that is so key going forward in terms of productivity and really to get the competitive edge against others within the space. What are you hearing on that front? And I guess, what do you think is the most important initiatives that you're hearing from these companies?
Yeah, so this discussion about IIoT, or in the industrial Internet of Things has been something that we've been talking about for a decade, right? And I've thought about it as being more about evolution, not revolution, and ultimately how it changes the service models for a lot of these companies. And so I go back to HVAC. I had a couple of HVAC names here today, Johnson Controls, Carrier, and they're both talking about double-digit service growth going forward. Now, what's allowing them to feel confident in that is that still a small percentage of their installed base is connected, so they're continuing to connect that installed base. Mm-hmm. And as they connect the installed base, they're getting more data, and that data is allowing them to be more predictive with their maintenance of their own equipment. And so, clearly AI is going to be something that comes next. And I'm sure that, when everybody starts talking about their digital offerings and how that's going to evolve going forward, AI is going to be a centerpiece. Still too early at this point, but I would say that just the connectivity of assets is going to be super important going forward.
When we talk about some of the issues facing the sector and many of the outlooks from the street heading into the year, we talked about labor shortage, and not just for industrials and materials. This is really across many industries. What are you seeing from that perspective? How big that challenge is here for these companies at this point?
It's easing. So we have a few companies that talked about that today, and last year the one that comes to mind for me was a company called Lennox International. They're also an HVAC player, and they were seeing real issues with a particular facility in Arkansas. And this past quarter, the margins in that business expanded substantially. One of the reasons for that was the fact that labor has become less of an issue. And so the labor market is still tight, and clearly there's still a competition for labor, and that's causing, wage inflation to remain sticky. But that being said, you are seeing a little bit less, tightness than we saw about a year ago.